It's time to spotlight Fubo after the company's latest earnings report. Let's welcome in David Gandler, the co-founder and CEO of Fubo. David, thank you so much for taking the time to be with us following your earnings report. Lots to talk about here, but if you wouldn't mind just starting with some of your key takeaways.
Yeah, look, it was a phenomenal quarter. But before I get into the quarter, it's probably important to note that we have combined Fubo with Disney's Hulu plus live TV streaming platform to form the sixth largest pay TV platform in the United States, and more importantly, the second largest virtual pay TV platform in the United States.
So let's focus on that as the second largest virtual platform here in the United States. How do you see that becoming a key growth driver for Fubo?
Yeah, well, as you know, Disney has solid resources. It's one of the largest media companies in the world. There are four key drivers that I think will really give us an opportunity to expand our business and to continue to grow. The first is obviously being able to market within the ESPN ecosystem, which has 50 to 100 million monthly active users in any given month, and that will allow us to really drive down subscriber acquisition costs. At the same time, we'll be able to experience programming efficiencies, driving down our programming costs, which is one of our largest cost line items, our subscriber-related expenses. And then there's obviously opportunity to collaborate on the advertising side, given their scale, which would allow us to really drive our CPM. So I see this as a massive opportunity for growth, and we're very excited about the unprecedented opportunities that we're about to collaborate on.
And David, how fast do you expect these synergies to materialize?
Yeah, well, as I said, I think there are a few areas where we could probably move really quickly. One of them is on the advertising front. I think, we think that Disney will be able to really drive growth. They'll be out in the market in the upfront talking about Fubo. We've also transitioned, as of yesterday, our advertising sales team to Disney. So that's an area where we think that we can probably drive some pretty solid results. And then, over time, of course, the programming efficiencies and being able to negotiate on behalf of, the second largest virtual MVPD will create more competition in the market, better pricing for consumers, and at the same time, allow us to have attractive economics to drive profitability.
And there's no argument that we made that there is not a very crowded streaming landscape right now. But now you have a tie-in with one of the biggest names in that landscape. As far as you look at how you're going to differentiate Fubo TV's value proposition, where do you plan to focus for investors?
Yeah, well, look, I think what we want to do is we want to drive profitable scale. This is an area where I think we've been focused on. Fubo standalone results that we shared yesterday were extremely strong. And when you, combine Hulu Live and the Disney ecosystem, it really amplifies these results. Unfortunately, we don't have our pro forma numbers yet. We anticipate that we'll have those in the coming months. And when we release them, people will be able to see, the opportunity ahead. But it's a really unprecedented opportunity for a company like Fubo that has really differentiated itself focusing on sports. Now we have more shelf space, if you will, in this complicated streaming ecosystem. We have a much larger complete bundle in the form of Hulu Live, which is really focused more on entertainment. We have the somewhat skinnier bundle of Fubo and Fubo Sports, even skinnier. And also our standalone offerings through the Fubo Channel Store, which is similar to the Amazon Prime Channels product. So we have a plethora of products that we can offer consumers at different price points. And that has clearly started to, work in the third quarter. And we think that could continue into the fourth quarter.
So with you saying scaling profitability is important, what are some of the key milestones or metrics that you would like for Fubo to hit in the next 6 to 12 months to give investors confidence that that's happening?
Well, I think what you're already seeing is two consecutive quarters of adjusted EBITDA. We had our investor day in 2022. And Marley, I think you would agree that it's been a very complicated media ecosystem over the last 3 or 4 years. And for us to be able to achieve the results that we've achieved in 2025, as we said we would in 2022, not knowing many of the things that have happened, such as Netflix picking up sports rights, I think we've done a tremendous job being able to achieve strong results. But I think we'll be continuing to focus on the same things. It's really about subscriber growth. It's about expanding our gross margins and focusing on net income and free cash flow over the next 12 months. And at the same time, it's going to be revenue growth and some new areas that we'll be focused on, given Disney's scale globally, is our international business, which we've really been focused on developing a lot of the tech stack to be able to allow us to scale efficiently in markets that we think that there'll be pretty good opportunities.
And David, you mentioned that second straight quarter of EBITDA growth, but we also saw record subscriber growth here in North America.
Yeah.
As far as your model, where do you see your strongest leverage right now?
Yeah, well, look, I think from a cost perspective, if you just look quarter over quarter, year over year, we continue to improve all of our cost lines. But the real leverage is really our focus on sports and really ensuring that in a very fragmented environment, we can offer consumers a one-stop shop. We like to call that super aggregation, where we can provide consumers optionality and flexibility across different price points on the demand curve. So that's where we're focused. We want to make sure that we have as much shelf space as we can get and really sort of drive home the brands and the identity that we've created for some of these packages to ensure that we're top of mind as consumers make their choices. And as you know, there are two major structural shifts that are going on right now that are playing into this tailwind. The first, of course, is consumption habits are moving towards streaming services and virtual MVPDs. And on the other side, it's monetization. We're seeing monetization from television, move to more of the streaming services. And given all the data analytics and capabilities, there's a lot of interest in continuing to generate revenue in sort of, I would say, adjacent to subscription, revenue streams. So we're very excited about the future. I think this is a fresh look for us, and we're looking forward to next quarter.
A very exciting time. And like you said, you have navigated through some very interesting years in the media landscape. Certainly.
We have indeed.
I was here for them, too. It has been interesting times.
Yep.
But David, thank you for taking the time to be with us on Trading 360 today to talk to us about Fubo's results and also your combination with Disney. That's David Gandler, the co-founder and CEO of Fubo.